Coinbase has just received conditional approval from U.S. regulators for a national trust charter. At first glance, this might sound like just another regulatory update. But in reality, this is a significant step in the evolution of crypto. And it could reshape how digital assets integrate into the traditional financial system. To understand why this matters, we need to look at what this approval actually means. A national trust charter allows a company to operate as a federally regulated custodian. In simple terms, Coinbase could securely hold and manage digital assets on behalf of clients under U.S. federal oversight. This is especially important for institutional investors, such as hedge funds, asset managers, and large corporations, who require strict regulatory clarity before entering the crypto market. Until now, uncertainty around regulation has been one of the biggest barriers preventing large-scale institutional adoption. This move begins to change that. With federal oversight, Coinbase can offer a level of trust, compliance, and consistency that aligns more closely with traditional financial institutions. But it's important to understand what this does not mean. Coinbase is not becoming a traditional bank. It will not take retail deposits, and it will not operate under a fractional reserve system like commercial banks. Instead, this structure is focused on custody, safely holding assets, and building financial services on top of that foundation. And that's where things become even more interesting. With a regulated framework in place, Coinbase can begin expanding into new areas, including payments, asset servicing, and potentially deeper integration with financial markets. This is part of a broader shift happening in the United States. Following recent political changes, regulators appear to be taking a more crypto-friendly approach, easing restrictions and providing clearer pathways for companies to operate within the system. Rather than resisting crypto, the system is starting to absorb it. And that could accelerate adoption significantly. We are moving toward a world where crypto is no longer separate from finance, but increasingly embedded within it. Coinbase's approval is one example of that transition. It signals that crypto companies are not just startups operating on the edge of the financial system anymore. They are becoming part of the infrastructure. And as regulation becomes clearer, more institutions may follow. More capital could enter the space. And more products could be built on top of this foundation. This raises an important question. Is crypto becoming the future of finance, or is it being reshaped to fit into the existing system? Either way, one thing is clear. The gap between traditional finance and crypto is closing, and developments like this are bringing that future closer, step by step. If you want to stay ahead of where finance is going and understand the changes as they happen, make sure to subscribe, because this is just the beginning.